What's going on? Welcome back to Trending Stocks. Today when I talk to you about intuitive machines, I want to go over some of the current data points, break it down what's been really coming out and why that might be signaling for a bottom. Before I get into any of that, make sure you guys hit that thumbs up, and with that, let's get right to it. So starting off, LUNR did go up 6.57% on Friday. Very volatile day, so 720 the low, 775 the high. That'll make a little bit more sense once I go over the technicals, but 10.06 million shares were traded. 22.02 is the average. Still, majority of the volume did come from shorts as well as algorithmic trading, so I'll kind of go over that in a second. But even looking right here, a lot of the barcoding here and throughout here is a very telltale sign of kind of just algorithmic trading among themselves. But on Friday though, on a positive note, you did see a little bit more buying coming from large entities. So these are all the transactions occurring on the secondary market above $100,000. So a good roughly 75% of all the large transactions were buys based on the bid, the ask, and the selling price. In my last video, I was somewhat bearish on LUNR and as well the broader market due to a lot of different things. So at that time, there was a lot of escalation coming from the Middle East. A lot of the data points weren't really signaling that momentum and growth stocks were really going to cut it. But since then, it literally did a full 180. And so I'm going to go over some of the data points, but this is very resemblant based on here as well. Just nobody was buying. So on the 3rd, every transaction was a sell. Same for the 2nd. October the 1st, like everything signaled that there was going to be lower lows. But like I said, the broader market just somehow pulled a ace and it just went up. So even for instance on Friday, you had non-farm payroll, 254 the actual, 147 the forecast. Phenomenal data. Even aside from that, you had the unemployment rate lower than anticipated. So two very strong data points, and especially the unemployment rate, that is one data point that the market was watching very, very closely, because Powell did state that the labor market is more important than GDP numbers at this stage in the game. So yes, this is absolutely phenomenal. Negative side to this, which caused a little bit of volatility first thing, is with good data kind of goes the likelihood of a 50 basis point cut, which in fact, based on Friday, just went poof. So I think on Wednesday there was a good likelihood, I think like 58%, and now it's at 0. So right now there is a 97.4% likelihood of a 25 basis point cut. And in my opinion, I think that is going to stick up until the meeting on November the 7th. But aside from that though, 25 for the November 7th and then 25 for the December 18th, still fairly good. And with a lot of the data points that's been coming out, I think there might be or at least it would be signaling of a bottom. And potentially with that being said, then you could see a rotation. I've kind of vaguely talked on this on different individual stocks, but there was a very big market rotation between 2020 and 2021. I'm sure a lot of people know who were investing at that time what happened. Every stock went up like crazy. You had a huge injection of capital. And right now we're sitting at all-time highs for money markets. In fact, based on the last report, which was on October the 3rd, there was $6.46 trillion sitting in money markets. So with this optimism that's been coming out for this last week and possibly even a little bit longer, that is a good signal that the consumer buying power is going to increase through rate cuts, as well as that could really prompt a rotation out of money markets back into equities. So once again, that would be absolutely huge. And not only that though, you have LUNR still very heavily shorted. So 22.08% of the free float is being shorted, which that does work out to be 12.61 million shares overall are being shorted. On Friday, shorts did increase 43,000 shares, utilization 82.74, cost of borrow average is 14.8, and then short score, so the higher the number, the higher the likelihood of a squeeze happening, is sitting at 75.17. Through IBKR does indicate around 450,000 shares is available to be shorted. So shorts, in my opinion, is somewhat overextended with intuitive machines, and if the market does continue to go up and a lot of these heavily shorted stocks as well continue to go up with the broader market, shorts are going to have to mitigate their risk and cut their losses. Whether it be margin calls or they just do it voluntarily, I do see more upside coming. So moving on from here though, looking at options, 1.76 million in calls, 309,000 in puts. There's this right here. And I'm a big believer, you don't have to go YOLO in, but I'm a big believer in following the finite kind of things like this, where what big money is doing. So just between 11 and 11:05 on Friday, there was 506,000 in premiums. 65% of all the options being done on Friday were optimistic and bullish. So let's kind of pull this up and just take a look at it. So looking and organizing it based on premiums, you see it looks like there's a consensus for it to be above 750 for the most part by January 17th, 2025, which given the price, which you can kind of see at the time was roughly around 770, that's generally very bullish, as you can kind of see. So big money is betting that there is upside coming. Once again, that's how I see things, but looking at some of the actual call options that were purchased on Friday, you see a consensus for it to be kind of around that 8 to 850 in the coming weeks. And then looking at puts, you see a consensus for it to be sub roughly around 750. So in my opinion, there is more upside anticipated versus down. And based on this right now, with it at $7.62, it is trading between this pivot and this R1. So it was able to kind of fight and get above back into this range right here. So $7.54 is going to be that strong support that you'll want to watch for. And then $9.50 is going to be that next strong resistance / target. On the actual chart, it did bounce off of that central boiling band right here. So yeah, all in all, the technicals are still looking good. Yes, you could see more consolidation in the foreseeable future, but based on the data points, consumers' buying power increasing through future rate cuts, I see a lot more upside coming. Again, might be premature to say, but I think that the bottom might be in. So let me know your thoughts. Do you guys agree with me? Do you think that this is going to pull back down into the fives, or do you think that there is more negative things coming from a macro standpoint? So what's your guys' viewpoint on all that? Give yourself a shout out as well if you have been buying, if you've been selling. Based on Friday, it looks like a lot of retail did buy based on this. Stochastic at the same time is at 49, so neutral, not really considered overbought nor oversold. So like I said, I think there is a lot of the data points I did talk on all are kind of cautiously optimistic for the foreseeable future. So let me know your thoughts. One final thing, make sure you guys definitely take advantage of this promo. It does give you 5 free stocks. Each stock is valued up to $2,000. So link to that is in the description below and also the comments. And on a side note, I did launch a membership for this channel. So if you do like this channel, and obviously you want to see it continue to grow, take a look at my memberships. I have it as well in the description below and the comments, and I'll play as far as my current members. Just wanted to say I appreciate all of you guys and everything else. And with all that said, appreciate all of you guys watching though.